Hey everyone, Tim Knight here. It's been a little while, hasn't it? I wanted to start off with something that Iguanodon, aka Iggy, on the site shared with me and has been sharing with others. He's been keeping track of kind of the trading this year and how basically not much going on. I mean, in a nutshell, there are like 5 days for the whole year that constitute pretty much all of the lift in the market. And as far as down days, they are few and far between. Today was one of the all too rare down days on the S&P. And the most dramatic collapse of all has been 0.69%. So pretty much impossible to make money in this market if you're a bear. And if you're a bull, it's getting more challenging too. You can see by the VIX here just how completely electrifying things are. I mean, gosh, weren't those the days? Wasn't it great back then? Gotta stop living in the past. We're stuck in this completely central bank-based nonsense. Boring. Anyway, I have been carefully selecting stocks. Today went pretty well. They in the GDX used to be really my total guide to like how things were going, and it's really becoming less and less useful. GDX today went up, nearly 2%. Thank goodness that was not indicative of the direction my bearish portfolio was going. I guess the world is starting to realize that all the clown bucks from the central bankers are maybe making real money a little more valuable. So I've been avoiding precious metals to some extent. Did a few day trades on GDX. Made a little here, lost a little there. Nothing really of much interest, but I'm out of it completely now. And I wish I could say, well, this is my incredible insight into what's going to happen over the next month. I'm sorry that it's not forthcoming. All I wanted to do here was just to thumb through some indexes and share a few thoughts about where things are at and maybe where they're going. The Nasdaq has been for all too long kind of blasting higher. From October 4 to present, it's put on incredibly about 700 points. About, what is that, a 30% rise or so? Very slipshod initially. I mean, it lost just about all those gains by November 25, but and then there was a smaller one of these little domey things. And then ever since December 19th, it has basically been, forget it, just a straight ruler up. Bang, diddy, bang, diddy, bang, diddy, bang. And beginning with really this year, or actually this month, February 3rd, it has been floating up here in sort of no man's land, levels not seen for 10 or 11 years. So this has been a troublemaker for the bears, and of course Apple is at the heart of all of that. Looking here at the Gold Bugs Index, this was a real standout today on the upside. We're still in this lower half of the range, and as long as we're in that lower half, I'm feeling decent about the prospects for a general market downturn. I still do think the GDX and this index here are indicative of general market direction, but it's a little conflicted now because gold's starting to kind of act on its own again. The Dow today, and it felt like a great day because the Dow was actually down all of 27 points, a fifth of a percent. This is how pathetic we bears have become at grasping at any decent straws. I just noticed here that I haven't really drawn a more short-term trend line, and there it is, kind of similar to the Nasdaq's. We really would need to take out the lows of February 10 in order to crack this trend line and make things a little more interesting. If the impossible happens and we do crack it, clearly this trend line becomes the next one to watch, which in the worst quote unquote in quote circumstances maybe get us near 12,000 again. So my supposition is that we are here, perhaps where we were here, that is near the end of a very surprising push higher after a former big drop in the market. Difference, of course, is that beforehand we had pretty decent topping pattern, a fall, and the retracement to the failure level. This case, not so much. I mean, we don't have that topping pattern going on. Really, one of the few things operating in our favor here is the fact that we're getting so close to that big channel. NDX, not a heck of a lot more to say about that, except in as much as we're also approaching a channel in this respect, going back for about a decade. It actually precedes the entirety of this chart here, but we are very close to that. And I would note, although I don't tend to use indicators a heck of a lot, that looking at my little so-called power quartet, obviously these are very elevated in these three lower ones. So we've got some crossovers happening with the RSI. And as far as the PSAR goes, we are, one day tomorrow, if it's anything like today, would flip that PSAR into the negative, I'm pretty sure. The small caps were weaker than the market in general. We are still beneath this descending trend line, which is anchored back to the ultimate peak here back on May 2nd, which in itself hopefully was a double top, a very, like kind of a lifetime double top, looking at 07 and 2011. But the market really has to start losing a grip in order for the bears to have a chance of making some money here. And it's my pledge to myself not to repeat the horrible mistake I made last year, in which, yes, I made money during this plunge, but not nearly as much as I should have. This, in a way, the fact that we have exploded this much higher for me is kind of a second chance to do what I wanted to do last time, which is really profit from this kind of drop. Transports yesterday and today were quite weak. I guess $110 oil doesn't exactly help the prospects of those who rely on fuel to move things from here to there. And I guess the Dow theorist out there kind of looking askance at the fact that the transports are so weak. But anyway, the picture for me at this point is kind of broken into the short and the intermediate term. Short term trend lines looking all essentially the same, like this, where we are very close to breaking it, but we need another even semi-decent day like today in order to make that happen. And the intermediate term is more along the lines of a trend line being established back to early October. I emphasize that it's not like, oh my God, the world's going to end. At best, I think that we're at 1355 now. Maybe we could find our way back to 1300 before I've stopped guessing what governments might do to keep this house of cards propped up, but they're getting awfully creative. As far as bonds go, which I haven't been paying much attention to at all, those have been trapped in this range. People always talk about how the bond market is so much smarter than the stock market, and in that I think we can take refuge, because the bond market doesn't know what the hell to do with itself, and neither do any of us, I don't think, if we're honest. This has been essentially pivoting around 143 for 5 months now. It just doesn't know what to do, because there's just people don't know if the economic signals that we're getting are indeed coalescing into, it's a grand new world again, or if in fact everything's just getting papered over and will collapse in a firestorm. I'm kind of in the latter camp. As far as the euro goes, I'm frustrated that it's taking so long for this thing to roll over. At least it hasn't surged higher, particularly on the bailout news. We are still, analogously speaking, in fine form, but it would really be nice to see this thing, lose 1 or 2% sometime, because the positioning of this now is absolutely sensational for a drop. But look at it right now. 0.000% change. Not a lot happening out there. So kind of frozen in time. All right. Well, thanks for using the social trade system, that new questions feature. Let's keep building up. It's going to get more interesting with time, and I'm glad it's finally out there. I've been working on it for a long time, so it's cool that it's real. And I will do my part getting in there and getting some questions and answers going as well. Got to practice what I preach. Thanks, everyone, and have a good rest of the week.